Good morning and thanks for tuning in. You're watching All You Need to Know on BloombergQuint Live and I'm Alex Matthew. First, the headlines. The coronavirus has spread to 5 additional countries other than China. The first case has also been detected in the United States. State Bank of India Chairman Rajnish Kumar says there will be no addition to the bad loans from the Reserve Bank of India's June 7 circular. He tells BloombergQuint in Davos that most of the accounts were already NPAs and provided for. More updates from Davos. Baba Kalyani of Bharat Forge tells BloombergQuint in an exclusive conversation that the worst is over for the auto sector and that things should normalize in the next 2 quarters. In earnings, Zee Entertainment missed street estimates in the third quarter as advertising revenue falls over 15% year-on-year. And 3 nifty companies, Larsen & Toubro, Asian Paints and Axis Bank will be reporting their third quarter numbers today. Let's talk about the US markets. They resumed trade after a holiday for Martin Luther King Day on Monday. Benchmark indices ended with losses after news that the Chinese coronavirus had spread to the US, raising fears, of course, of a global pandemic. The Dow Jones snapped a 5-day winning streak on Tuesday, ending with cuts of about 0.5%. Renita Young of Bloomberg News wraps up the trading action on Wall Street in this report.
U.S. stocks ended lower on Tuesday in a global decline where investors grappled with worries about a virus happening in China and whether or not that would undercut economic growth. Davos, Switzerland World Economic Forum is continuing to take place this week and corporate earnings season marches on. One of the latest companies to report was Halliburton, beating analyst expectations for the fourth quarter, and Netflix, which also beat analyst expectations just after the bell, yet the company issued light guidance. Meanwhile, gold and WTI crude oil were lower, and for the first time in 14 sessions, palladium traded lower. This was after hitting another record high on Monday, and the Bloomberg Dollar Spot Index hovered around unchanged during the session. That's a look at your Wall Street action on Tuesday. In New York, I'm Renita Young for Bloomberg News.
All right, China's coronavirus continues to spread, with the first case in the United States being reported yesterday. Global health officials are struggling to contain the virus, which has killed at least 6 people, having infected over 300. Selena Wang of Bloomberg News has the latest.
Well, the really big concern here is that travel is already beginning for the major New Year holiday in China, and that's when citizens are expected to rack up some 3 billion trips around the country. So there is concern around the world that this could really increase the spread. And since the virus was first identified in December, you have seen almost 300 people infected. Those are confirmed cases, with more than 100 of them discovered over the past weekend. Now, while the majority of the cases are in Wuhan, a central city of China, they have now been spreading across Asia, Japan, South Korea, Thailand, and the first confirmed case in the United States, that's of a 30-year-old, a man in his 30s, who is now in good condition, according to the Center of Disease and Control. There have been 6 confirmed deaths. Those have mostly been elderly people with already pre-existing health conditions. So health experts say that the people most at risk are the elderly. And even though, however, the rate of fatalities has been relatively low, the concern here is that this disease could mutate and become even more deadly. The World Health Organization is convening a meeting where they're going to be discussing whether this is of international health concern, and they could implement some sort of emergency declaration that would stop travel and trade of certain goods.
So, Lena, what about the response domestically from China? Because we have seen quite a lot of criticism online from Chinese netizens about the way that it was at least dealt with at the provincial level.
There has been some concern from Chinese netizen, and we have seen the censors at this point allow some sort of free-form debate. But in terms of how this compares to back in the early 2000s when the SARS broke out, the Chinese government has significantly stepped up the types of controls, types of measures they're taking. Since the SARS outbreak, the Chinese government implemented transparency reforms and also created a disease control and prevention system. We have seen all levels of government issue statements that this needs to be taken seriously. You have Xi Jinping saying that this needs to be resolutely curbed, Premier Li Keqiang saying governments need to be transparent, and the top Communist Party legal body saying that any official that tries to cover this up will have serious ramifications. So you are seeing heightened awareness among the people. A post about this spreading to healthcare workers on Weibo reached over 1 billion views. You have more people wearing masks here in Beijing, not just for the pollution, and some offices passing out masks as well. So when it comes to transparency and reforms, not perfect, but miles away from back in early 2000.
So be mindful when you're traveling. Now, speaking of traveling, a lot of global leaders have headed to Davos for the ongoing World Economic Forum summit there. And over there, Mahindra Group Chairman Anand Mahindra spoke to Bloomberg. He says that the economic slowdown is a much-needed detoxification for the Indian economy, and growth may surprise to the upside sooner or later. He spoke to Bloomberg's Tom Keene at the World Economic Forum, and he explained why the government is taking the right steps to revive economic growth. Listen in.
What was underway for a while now is the detoxification of the economy. The Prime Minister has been quite obsessed that the kind of growth he wants is growth that's transparent and free of any kind of corruption and any kind of rent seeking.
Is he succeeding at that mandate?
I believe the perception right now is that it's caused this kind of slowdown. But on the other hand, if you're going to detox yourself, you always have a process of cleansing before you start recovering and running again. And I think that's what's happening. The demonetization was with that end in mind. The GST tax, which frankly all of us pushed for, I was a great votary of it, I'm very pleased it's here, is making it impossible for people to work in a non-transparent manner. But it's caused disruption because people who are used to trading in cash and trading off the radar now have to be on the radar. So there's an enormous adjustment process underway. I think the government has realized that in order to get that engine moving, they need to be far more propulsive, if you will, for the economy, propel consumption, forget about obsession with the deficit for too long, and they're taking the right steps now. So I think my experience from our industry and the auto industry is that we're already seeing signs of life, and I think from the next fiscal year, which starts in April, we're going to, I think India is going to surprise on the upside.
You are a third-generation industrialist within India. You were born with privileges, and of course you've taken it so much further than that. Explain the generational divide within India. Each country seems to have a story of younger people rebelling in populism or whatever nation to nation it is. Explain the generational divide within India.
You know, I think it's plus ça change, as they say, plus c'est la même chose. I used to, in fact, bemoan the fact that a lot of the young people, the millennials, didn't seem to be protesting. I'm from the Woodstock generation, Tom. It was a rite of passage. I used to think that if you don't protest, if you don't have a cause, then you're probably suffering in the IQ department, or at least in the EQ department. And I was giving up. I thought everybody was at a 3-minute attention span, YouTube and Snapchat. When Snapchat happened, I almost gave up. And for whatever the protest, misguided or not, I think for young people to want to have a cause is a good thing, in my opinion.
All right, now Microsoft CEO Satya Nadella is among several business leaders in Davos who spoke about the impact of climate change. He spoke to Bloomberg's editor-in-chief John Micklethwaite on Microsoft's recent commitment to invest in companies working towards carbon reduction technologies. Listen in.
It came down to saying, look, what is Microsoft's responsibility? We are increasingly becoming a big consumer of energy because of what we're doing with the cloud, and it sort of, was very clear to us that given the science that climate change requires immediate action, this is the decade. And so we wanted to start by saying, look, let's make some good commitments. And the commitment to being carbon negative by 2030 means we will now have to make sure that all of our data center operations are first consuming renewable energy. And then also we take all the carbon that we have put out and ensure that by, either through new technology or by natural means, we we can take it out and become carbon negative.
And that, as I understand it, that is all the historical carbon you think.
And that'll be by 2050. So we want to go back to all the way to 1975 when we were founded, and we take out all the historical carbon as well. And that's the other commitment. And when it comes to the billion-dollar fund, we do need real breakthroughs. This is no one company is going to do this, and so therefore we are very committed to sort of putting even our own balance sheet money on it, and then looking to see the ecosystem.
You mentioned quickly the immigrant in America. And again, Microsoft is one of those companies that's pushed quite hard against the sort of current flavour of, I suppose, immigrant bashing. Do you think that that is being changed in America?
I think, first of all, America is a country of immigrants. It's a nation formed by immigrants. And to me, when I look at the contribution that immigrants even going forward can make is something that I think the United States should be absolutely tapping into. And so that is what I speak to, and that's what I think the Microsoft has benefited from it. I personally have benefited from it. So we are clear in terms of why immigration and enlightened immigration policy continuing in the United States is perhaps one of the most important things for its own competitive advantage.
Do you worry that it's now getting slightly unenlightened?
Not really. I mean, I think still America is the place where people want to come to. One of the things that's happening is every country is rethinking what is in their national interests. Borders are real. People think about immigration policies that help. But I think in there, they have to maintain that modicum of enlightenment and not think about it very narrowly. And that's what has, I think, made it possible for those values that have helped people come be the attractor. It's not about, people only will come when people know that you're an immigrant-friendly country.
SBI Chairman Rajnish Kumar says the Indian banking system cannot afford for a telecom company to shut down. Speaking on the sidelines of the World Economic Forum in Davos, Kumar said that he hoped the government would give the telecom players enough breathing space to get over their financial crunch. Here are a slice of his conversation with Menaka Doshi.
It's not that we didn't have problems. Already we have two large accounts going into bankruptcy. One was Aircel and the other was Arcom. So we don't want any other to go that route. And I'm sure that the decision makers also are mindful of this fact.
Can the banking system take the collapse of a telecom company at this point in time, sir?
We would not like to. But
nobody would, but
nobody would like to.
1.3 lakh crores. We already have been put on notice that NPAs are going to continue to rise, even if it incrementally. Can we afford to have a telecom company go down?
No, we can't. It's very critical that it doesn't happen because it has huge implication for the telecom sector. It has huge implication for the banking system.
Right.
So that is what, and that is what I'm saying.
So that's your message to even the government, sir, that at this point in time, given the last few troubled years, the banking system does not have the capacity to take the closure of a large telecom company.
It's not about the banking system alone. It is
about the competitive issues in the telecom sector are that's a different matter. But since I'm speaking with you and you are the largest banker in the country,
all connected.
So your message to the government is that
to anyone who is dealing with
that they should do what it takes to allow these telecom companies some breathing space, so that we do not have the closure of another telecom company.
Because from the consumer perspective also it is not good. And
of course, yes.
That is where I believe that let us wait, because it is a matter still sub judice.
Okay.
And let us see what is the Supreme Court decision in the matter is, and what are the steps which government will take. But I don't think there can be two different opinions either in the government or in the banking system or the sector itself, that closure of any telecom company at this stage would not be good for the sector, for the economy, for the consumers.
Well, then let's see what the government does to, ameliorate the situation, as they say. You've said, right now to me in a previous interview that 2020 will be your best year in terms of IBC recoveries or IBC-related recoveries are concerned. But the big ones are out of the system, right? So were you referring to FY20? So you're referring to the financial year which will end at March 20. So that will account for SR Steel, etc., etc. So, that brings me to the point that most of the big resolutions, especially in the case of steel, where some of these companies, there was market value to them, there were buyers. That's done. From here onwards, it's a bit of an uphill climb, isn't it?
So you will have fewer cases.
Right.
And the recovery will also come down, so that's all right.
In FY21.
FY21. So
okay.
I would be happy with that situation where there are no new references and whatever is remaining gets sorted out within March or at best by June.
No new references, sir, is possible? The June 7th circular timelines all start becoming effective?
All that is taken care of. And
so I'm told that SBI has what, 10 large accounts, 1 lakh crore exposure to decide by March 31st. Okay, so correct me, please.
I don't know from where
what are the consequences? What are the consequences of the June 7th circular timeline?
Number was already under NP. Many of these accounts are provided 100% already. Okay. Many of the accounts got resolved. Resolved means rectification happened. They got regularized. And I would say that wait for 31st December.
But if they were already NPAs,
31st January,
the June 7th circular would not have any implications if you had already provided for NPAs,
so
right? The June 7th circular was to look at stressed accounts and take immediate action. So will we not see an addition to the, the stress portfolio?
That's what I'm saying. When we talk about the size of the problem in terms of the fresh NPA as a result of that circular and the provisioning requirement, so I think wait for 31st January and when we declare our results, we will give you a very complete picture on that.
But not just for SBI. Give us a sense for the broader system.
SBI does,
I understand earnings. I understand earnings are upcoming.
Not about earnings. What I'm saying
but I'm just curious to know how large is that problem going to be
presented.
Okay.
So it will largely be representative of the industry because either we are leading or we are participant. So we are looking at 34 accounts.
Right.
Either as a leader or a participant.
Okay.
And many of them, as I said, already NPA, so it doesn't test. No fresh addition happens as a result of that.
Okay.
Some of them already under radar for being that the slippage will be there.
Okay.
It was to happen, whether 7 June circular or no 7 June circular.
But the provisions were made already for that or additional provisions will now happen?
That additional provision for any fresh, new
has to kick in.
It has to kick in.
Right.
So that will kick in December
So how many of the 34 accounts were already...
we have
ballpark figure, if you can give me how many of the 34 accounts?
We are in results period, so I can't give you all the numbers. That's what I'm saying. 31st January, you will have complete picture. Just it is a matter of 10 days more.
All right, do come back to us 10 days hence and we'll tell you what we find out. Now, the auto sector is going through a cyclical slowdown or downturn, according to Bharat Forge Chairman and Managing Director Baba Kalyani. He was speaking to Menaka Doshi at the Davos event, and he also says that there's no reason to be too pessimistic about demand, which is bound to revive after 6 months or so.
2020 is a year which is going to be challenging for the manufacturing sector and especially for the automotive industry, and not only in India, worldwide. We are in a cyclical phase where we are in a down cycle, almost, of course, in India, in Europe, in North America. And I think this down cycle will play through at least the first 2-3 quarters of calendar year 2020.
Okay.
And then you will start seeing the growth coming back. It was very interesting to hear President Trump speak in the inaugural address at the plenary. And I've never seen a U.S. president more optimistic about growth and the numbers.
But he has to be, he's in an election
that's okay,
year.
But the numbers he rolled out were very impressive. So I don't think we need to be overly pessimistic about things. I think the automotive industry is cyclical in nature. We are going through a down cycle. And unfortunately for us in India, a couple of other events kind of coincided with the down cycle. So the down cycle seems much more deeper than it is. But I think the worst is behind us. I think we're already beginning to see growth coming back, and I think give 2 quarters more, and I think we should be getting back to in normative automotive industry and then growing from there.
What gives you conviction that the worst is behind us?
The numbers. We're beginning to see.
So
in every
terms
sector.
of order book numbers,
Yeah,
or the conversations you're having with clients.
Yeah, exactly.
So is it anecdotal? Is it data-based?
No, it is
just
all
trying to get a sense
no,
of it.
it's just data-based.
Okay.
It is purely data-based. In this industry, there's nothing called an order book.
Okay.
Okay, it's all. It's one industry which is highly automated in terms of supply chain. So everything is EDI-based. Everything is digital. So it's based on what demand we are seeing from our customers, what offtake.
Okay.
So that gives me to believe that the worst is behind us, and I think slowly things will get back to normal.
What kind of uptake are you seeing in demand? Because if I remember correctly, at least at the company level, you all had forecast that the second half of FY20 will be muted growth.
Yeah, correct.
So is it good enough, the uptick that you're seeing, to revise your guidance in some fashion?
No, we are not revising any guidance. I think the growth will be muted, but I think we were very clear even 6 months ago that we will have a difficult period in Q3, Q4, industry-wise.
Right.
And I think after Q4, one should start seeing an upward movement. Now we are beginning to see that upward movement, slowly but steadily. But it's a global phenomenon. It's not just an Indian phenomenon. So we have to run through this down cycle.
I want to come to the budget issue that you spoke, or rather, let me put it, budget and other fiscal interventions that the government needs to make. What are you a votary of that they consider expanding the fisc and investing in infrastructure, which is a medium to long term, but a better return and a better quality of spend situation, or immediate consumption boost?
I think the government has already announced its intentions of investing in infrastructure.
But I mean that, if I may say so, is intention at this point, not concrete plans.
Yeah, well, that's why I said that I think we need to wait till what comes out of the budget. Because it all depends on
But you're in favor of more money towards infrastructure as opposed to an immediate consumption boost?
What will it do in consumption boost?
Maybe boost the Narega program, or put more money in the hands of people through PM Kisan, or instances of that
I think those kind of things will happen, but I don't think that might help the economy incrementally. But what will help the economy to a large extent is investment in infrastructure, which will create immediate demand for capital goods, which will make the economy in the medium term more efficient. I mean, what is infrastructure all about? Is to make the economy more efficient and make it more competitive. And I think that's the direction, at least from my sense,
that the government should take.
The government is taking or talking about.
Well, what about should take? What's your idea for growth?
Should take. I mean, that's what they need to do. They need to put large amounts of money in infrastructure.
Oh, barely 10 days away now from the budget 2020. We'll see soon enough what comes in that document. For now, let's turn to trade today, and Agam Vakil is joining me to tell you all about the trade setup, as well as to tell you what's happening in the futures and options space. Good morning, Agam. So a bit of optimism based on what Mr. Kalyani is saying in the automotive space, perhaps a little moderated by the retail numbers that came out yesterday for the month of December, but we're talking about markets.
Sure. So when it comes to the markets, for now, the SGX Nifty is indicating, a positive start. What we saw yesterday was, a little bit of recovery, but eventually we did close in the red. So we saw that in the Nifty, as well as in the mid-cap and the small-cap indices. The banking indices also, showing a lot of volatility on account of weakness in, banks like Kotak Mahindra Bank and HDFC Bank. But let's move on and talk about your ADRs. And for now, we're looking at sharp cuts because of the weakness in HDFC Bank, as well as Vedanta, and Tata Motors declining by around 4%. We'll be watching out for some of these names as we move into trade today. And let's also talk about fund flows then. And of course, we had very little action there. 50 crores worth of selling from FIs, and DIs sold stock worth around 307 odd crores on a net basis. We did have, HDFC, something like HDFC Bank and along with ICICI Bank were weighing down on the indices. But as you can see, the others contributed to about as much as 42 points. We did see some gains in Zee Entertainment, but we're going to have to wait and watch whether or not we do see some weakness today, considering the numbers were not up to expectations. So that's the big earnings to watch out for today. And moving on to your futures and options space, when it comes to the Nifty futures, about 1.2% decline in OI. The Bank Nifty futures looking at, well, fresh shorts, if I'm not mistaken. There you have it, about 2.4% there. And moving on to your range, still a 500-point range between 12,000 and 12,500 in terms of change in open interest. We are looking at a little more writing around the 12,200 call, as is evident, the most active option. And the VIX, of course, rose around another 3%, nearing and inching towards the mark of 16. The Nifty put-call ratio also, well, fell further to a very neutral level of around 1. And in terms of stocks, well, we are watching out for Indian Oil Corp, PFC, Cholamandalam Finance, and Torrent Pharma. All of them looking at some amount of declines and well, some weakness coming in terms of stocks which are unwinding. We're keeping an eye on Dish TV, Kotak Mahindra Bank, and Century Textiles. Besides some of these names, Alex, we'll also be watching out for Zee Entertainment. That's the big earnings watch for today.
We're going to talk about that. Thanks so much for that, Akam. All right, stocks to watch in the news. Somit Sarkar is joining me to tell you all about that. Somit, morning. Over to you.
Good morning, Alex. I'll start off with the earnings that came in post-market. Firstly, Polycab, no strong top-line growth, but the margins of the company dropped on higher raw material and advertisement costs. In the wire and the cable segment, revenues were up 18%, led by exports and optical fiber sales. However, the domestic channel sales in the third quarter was impacted by the overall macro slowdown. On the FMEG segment, there's a fast-moving electrical goods segment. Revenue was up 34%, and the segment continued to break even despite lower margins. The company's balance sheet remains healthy, with net cash improving for the business. On the flip side, Havells reported below a set of numbers. The numbers were weak as the revenues were impacted due to weak macro, liquidity challenges, and slowdown in the infrastructure segment. The margins maintained due to cost rationalization initiatives and lower ad spends in the quarter. Now, if you see the segment-wise, switchgear segment revenues were down 5%. Cable segments were revenue was down 13%. Lighting segments revenue were down 18%, while the ECD segment revenue was marginally up by nearly 1%. Large segment, that is the AC segment of the company, was down nearly 16% due to continued decline in the LED TV business. HDFC AMC, a good set of numbers. Revenue were up 10%. Net profit was up 45%. Quarterly average asset under management, now that was up 14% compared to last quarter. AUM growth slows, but the portfolio management service did aid the profit of the company in the third quarter. Now, the AMC retained its leadership position, but the market share across the board moderated to 15.5%. The retail investor base, however, continued to hold up well during the quarter for the company. TEJAS Networks, a weak set of numbers. Revenues were down 53%. EBITDA declined by nearly 99%. Margins came in as low as 0.5%. A sharp decline in revenues seen from the Indian government impacted the company's financials. The company reported a net loss of nearly 112 crore rupees, and the management also said that financial year 2020 might not be profitable for the company. India Mart Intermesh, a good set of numbers. The revenues were up 23%. EBITDA was up 59%, while the net profit jumped nearly 2 times for the company. Now, increasing paying subscribers and higher realization from existing customer did aid the company's revenue and the bottom line. Bharti Airtel, now the company received approval from the Department of Telecommunication for increasing the limit of FDI investment in the company to up to 100%. So that stock will be important to watch out for, and this is a positive news that has come in. Glenmark Pharma, they are looking to sell their gynecology business in India and Nepal to True North Fund for a value of nearly 115 crore rupees. And lastly, Piramal Enterprises, where the company said that the total application for its rights issue has been oversubscribed.
Thanks so much for that, Somit. Now, Zee Entertainment in earnings missed the marks, or rather missed market expectations in the third quarter, as advertising revenue saw a sharp decline in the last 3 months of the year. Forum Bhatt takes us through the numbers.
Well, the company reported weak set of numbers this quarter. Revenues were down 5.5% to rupees 249 crore. EBITDA was down 34% to rupees 526 crore. Net profit was down by 38% at rupees 349 crore. Margins were at 26% as against 37% a year ago. Now, ad revenue declined significantly for the company by 15.8% at rupees 1,231 crore. Subscription revenue grew by 15.4% during the quarter. Now, ZEE5 recorded a peak daily active user base of 11.4 million in the month of December. Now, company's all India viewership stood at 18.2% this quarter. Other than that, the company also launched 3 new channels in the month of January this year. Some of the other highlights of the earnings was that if you remember last quarter, the bank had unilaterally adjusted rupees 200 crore worth of fixed deposit against dues from related party. Now, the company states that these dues were recovered by them during the quarter. But however, auditor gave a modified opinion on this set-off of fixed deposit against recoveries from the related party. They state that they are unable to comment on this on account of non-availability of relevant information. Other than that, the company also reported an expected credit loss of 38 crore during the quarter against receivables of rupees 750 crore. Now, remember, the management had earlier stated that they expect the receivables to go down during fourth quarter this fiscal. So this would be something to be watched out for going forward.
On to earnings that you have to watch out for today. Larsen & Toubro is reporting its numbers, and it's expected to be a subdued quarter on account of sluggishness in execution. I'm joined by Darshan Mehta, who's here to tell you about the key numbers. Darshan, what are the key numbers to watch?
Yeah, so we are expecting close to a 10% increase on both the top line and the bottom line. The EBITDA margins are expected to be much better. We are seeing EBITDA margin growth of almost 17% coming in on the back of cost controls. Now, that's the trend that we are seeing in on the markets itself. The important thing is what will they say as far as the order flow is concerned, because the order flow this time around has been very, very subdued, because now they don't give an exact order, but they give in terms of buckets. So the minimum to maximum, the average range that we're looking at is anywhere between 11,000 to 17,000 crores. So that's the order inflow. And obviously there was elections, there were other infrastructure projects which got delayed, and that is why it was important to see what exactly happened. Now, if you're looking at it in the last quarter itself, they did orders worth almost 48,000 crores, and this time around on a sequential basis, yes, there will be a massive drop that will come in terms of the order flow. Now, the guidance that they have given is 12 to 15% on the revenue front, pretty much will be met, but more importantly, the order inflow guidance was 10 to 12%. Remember, last year was the only year in which they didn't cut the guidance. 6 years before that, they've always cut the guidance in the second quarter or the third quarter. So it will be very important to see, because in the second half, at a 10% growth rate, they need almost close to 1 lakh crore of orders to come in, and 1,11,000 on the higher end. And if they manage to do just 25,000 crores, it will be a tall task for the fourth quarter. Execution, in terms of certain factors that we need to watch out for, execution may be weak on account of elections. There is a general slowdown that is there. Most of the hydrocarbon projects haven't started to pick up. Weakness in the international markets may dent the revenues. Mindtree obviously is consolidated, so my margins probably will be stable, because that Mindtree's numbers were decent. Lower other income this time around is expected to impact the profit, and working capital is something that will keenly monitor this time.
Thanks so much for that, Darshan. Now, lower tax rates are likely to boost Asian Paint's bottom line. The paint maker may also see an expansion in its margins. Yash Upadhyay takes you through what the key street is pricing in.
Well, that's right. Asian Paints is expected to come out with their third quarter numbers today, and overall the street is expecting a steady quarter for the company. Now, let's take a look at their headline numbers, and as far as their top line is concerned, it is expected to grow by about 7% year on year to about 5,686 crore rupees. Operationally, their EBITDA is seen higher by almost 12.5%, while margins could see a marginal improvement by about 100 basis points to 20.5% over 19.7%, which they did in the same quarter last year. Net profit, aided by the lower tax rate, could see a higher jump of almost 23% to about 780 crore rupees. Now, apart from that, the key numbers to watch out for as far as Asian Paints is concerned is the volume growth in the domestic decorative paint business. Now, in the base quarter, we had seen a large jump of almost 22%, and on the back of that high base, most of the street believes that Asian Paints could do a volume growth of closer to around 10 or 12% in this quarter. However, there are certain analysts on the street who expect that number could be in the high single digit as well. But apart from that, the key factors to note down will also be the impact of lower raw material prices. We've seen how crude oil prices, they have cooled down, and crude-linked derivatives, they form almost 60% of their total expenditure, and there we could see some respite coming in. However, because of the fact that we've seen the product mix shift towards a higher share of the low margin products, which includes their economy version of paints as well as emulsions, that would be something that we would be closely keeping an eye out as far as the product mix is concerned, because that too will have an impact as far as their margins are concerned. Last quarter, despite a 14% volume growth that the company reported, the margins did disappoint the street, and that was because of the deteriorating product mix. So product mix along with the raw material price trend, that would be something that we would be keeping a close eye on. Apart from that, the company has taken certain price cuts in the previous quarter, about closer to around 1%, as well as some discounts that were being offered in the festive period. So some clarity with respect to pricing as well as discounts is what we would be watching out for. But most importantly is the management commentary with respect to the demand outlook. Now, we've had a very good monsoon this time around. There was a delay in the first half, but then it continued to progress well, and on the back of that, the Rabi season too has been fairly positive. That is at least as far as the agri companies' results are concerned. So some amount of indication as to how the demand outlook will be is what we'll be keeping a close eye on as far as the management commentary is concerned. And lastly, some color on the outlook as well as the performance of their industrial paint business. Overall, it does not contribute a large chunk to their revenues, but the industrial paint business that has undergone severe stress over the last 12 to 18 months on account of the overall slowdown in the economy as well as the automobile sector. So some outlook with respect to that would also be something that the street would be keeping an eye out. But all in all, for Asian Paints, it is expected to be a largely steady quarter with no fireworks expected.
In the banking space, Axis Bank is likely to report a healthy growth in its net profit. A media-related account may lead to a slight deterioration in its asset quality, though. Shifali Malik takes us through what the street is pricing in.
It's expected to be a steady quarter for Axis Bank this time around. We are factoring in net interest income growth of 13% to 6348 crores. Pre-provisioning operating profits are expected to jump by 9%, and its profit figure is expected to go up by 27% to 2139 crores. Now, when it comes to the business metrics, the loan growth is expected to come in at about 15%, deposits grow 21%. So these will be good numbers in comparison to some of the other private lenders who have reported results so far. And what are the factors at play that are expected to play out for Axis Bank this time? The loan growth is expected to be led by retail unsecured book, SME book, which is expected to aid loan growth this time. And it will be interesting to see what kind of delinquencies they are seeing in the unsecured book, that is credit cards and personal loan portfolio. So remember, Kotak Bank has pointed out that they are seeing delinquencies rising in their unsecured book. So it will be interesting to see how the trends are shaping up in the retail category. Also, the bank, remember, raised funds a quarter back. So the benefit of which is likely to start coming in this quarter because it was the first full quarter of the capital raise, and slippages are expected to come in at about 4800 crores. In this quarter, the bank may recognize a media related exposure, so that may slip during the quarter and hence will show up as an NPA. Margins are expected to remain healthy at 3.5 to 3.6% versus 3.51 in the second quarter. Corporate slippages will be an interesting area to look at, especially the watch list category and the double B and below book. That entire book will be in focus for them. So some numbers that we are factoring in: gross NPA is 5.3% versus 5% on a sequential basis. So that's what broadly we are factoring in from Axis Bank this time.
All right, quick reminder before we go, there's a lot of content coming in from Davos in Switzerland, and you'll find all of that on the website BloombergQuint.com. Of course, apart from the markets and everything from the world of business. Thanks so much for watching. This is Bloomberg Quint.